Hey everyone, welcome. So before we begin, I just want to remind you all that this presentation is not financial advice, and I'm not a financial advisor. So any trades you take using my indicators or any ideas I suggest are your trades and your trades alone. All right, let's jump in. So today we're going to talk about what's new since March 22 with Saty ATR levels. So a lot's changed in almost a year. If you've been following along on Twitter, or if you watched some of the videos from the early half of last year, you probably saw some of the changes, but some major changes were made in January with the latest release. So let's walk through them. There's quite a bit to get through, and we'll try to review some of the things that have changed also that happened throughout the middle of last year, which I never got to make a video on. All right, so here's what we're going to discuss. Look and feel. So lines have become a little bit more precise. Instead of using clouds, we're using plots. I've added up to 3 ATR extensions. These are super useful on higher time frames in particular, and with higher ATR levels modes, and we'll talk through that a little bit. And then also, as you guys all know, ATR levels are Fibonacci levels that are plotted between the previous close and plus or minus 1 ATR. And initially I started with the 23.6 and the 61.8, the golden fib, as the primary levels. They work beautifully. That's still the default, but you can add the remaining Fibonacci levels, which makes it a lot easier for finding surgical exits and also just witnessing support and resistance throughout intraday or throughout your chart, depending on which time frame or which mode you're in. All right, so super helpful for scalping in particular, but also incredibly helpful when you're looking at, let's say, a daily time frame with a higher mode like position. All right, let's go through we'll also talk through all 6 modes. There's 5 for TradingView, 6 if you have Thinkorswim. You got a bonus one. We'll talk through each of those and kind of what time frames I like to pair them with, and I'll show you some charts as well. All right, so let's talk about look and feel. So I've made adjustments to the levels themselves, and I'm going to save all the images for later. We'll walk through and you'll be able to see examples of everything when we get to the modes, but we'll talk through it right now, and I think it'll be clear by the end of the presentation. All right, so look of ATR levels is cleaner. I changed from clouds to plots. For Thinkorswim, the connecting lines have been removed. This just makes it visually more appealing. And for TradingView, I was looking to try to do similar, but wasn't able to figure out how to do that. There may still be a way, but I have streamlined the connecting lines, so they're no longer angular. They're at least vertical at the transition point, so that should hopefully help. You can, of course, change the lines. You can make them bigger. I think it's set to 2 right now, and the default, you can change it to 3 or 4 and play around with that to your heart's content. And the lines will go across the screen on Thinkorswim as normal, but TradingView stops them where the price currently is, so you can turn on price lines if you want to extend them. Okay. All right, ATR extensions. So in the summer of last year, I released an update. As we were starting to get deeper into the bear market on higher time frames, we were getting past minus 1 ATR position mode, and in conjunction with that, I also released a long-term mode, which gives you really nice levels for the year. And so I released this update with extensions. They're now on by default, and if you're finding that your levels are squished on Thinkorswim, you want to uncheck Fit Studies, and on TradingView, you want to check on Scale Price Chart only. All right. So these extensions kind of allow you to see a bigger picture, particularly on higher time frames with modes like position and long term. Well, I'll show you what that looks like. But when you're let's say trading over the course of a year, and it's in, an uptrend or a downtrend. So last year was a downtrend. Now we're in an uptrend for the year. This can kind of help you understand where you are relative to the beginning of the year. So I highly recommend actually reviewing the daily chart, just in general. You should do that regardless. But it's a really good idea to take a look at those with position and long-term modes. Position and long-term may not work on all tickers, particularly newer IPOs or anything that's been, less than, let's say, position will be less than 14 quarters and long-term would be less than 14 years. But things like indexes, the long-term mode can be really, really helpful. So SPX, SPY, ES, So for the S&P 500, those three, NDX, Qs, etc. Also for mega caps, Apple, Microsoft, Google, Amazon, Tesla, etc. So definitely take a look at those. Really helpful. Will give you a sense of kind of where you are, and I'll show you some examples later. Extensions may not be as useful for short-term trading, but they definitely can be helpful during gap ups and gap downs. They may not be useful. You can play with them. You're welcome to turn them off. They are on by default right now. I think you should try them out, particularly try them out with those higher modes. All right, and then finally, full Fibonacci levels. This just provides a more complete picture. Fibonacci is very useful, as you guys all know. Drawing retracements is very helpful. And of course, ATR levels are based on Fibonacci and ATR. So now I'm giving you them all. So the original ones had 23.6 and 61.8. Now you've got the 23.6, 32.8, 50, 61.8, and 78.6. They're off by default right now as we transition from the old levels to the new ones, but I will eventually make them the default because I do think they're incredibly helpful. And I have them on all my charts. And then, I just want to make a note, there's a limitation to how many objects you can put on a screen, in an indicator for TradingView. And so you'll only be able to see all of the Fibonacci's up to about 2 ATR on TradingView. Hopefully they'll remove that restriction in the future. I can make them go all the way up to 3. If you're on Thinkorswim, they work all the way up to 3 ATR. Okay, so let's talk about the mode. So here's day mode. This is Tesla. And it went all the way to plus 2 ATR. So this is a good example because it shows you all the fibs. It shows you the precision lines. And it also shows you extensions. So it basically shows you all the things that we've added over the course of the last year to this. So day mode's really good for scalping or day trading. You can see that there's opportunities here to take scalps if you want at levels, from level to level. And of course, you could have held pretty much the whole day. And if you use an EMA system like Ripster EMA clouds, the Saty pivot ribbon, or just EMAs or moving averages, probably could have kept you in the trade for that as well. Day mode pairs really well with anything under 30 minutes. I mean, you can go higher. Hourly might start. I mean, it's not gonna. It would work. I'm not sure I would use it, but you certainly can go high. But I think it pairs super well with anything from 1 minute to 30 minute. I use the 10 minute and I use extended hours on. So you can see that as an example here. So all the examples I'll show you as my defaults. And then for scalping, same deal, extended hours on, but I just go down to the 3 minute. So super useful. And you can see that this was a beautiful move. Started at the put trigger in pre-market, went above the call trigger, held it, and then just continued up all the way to almost 180, actually above 180. And we were talking about that. This is a mean reversion play. There's a tweet that I posted on why 160 calls. You guys can check that out. But beautiful move yesterday on Tesla. So that's day mode. These levels are calculated each day. They're based on the last, by default, by the last 14 days. All right, let's talk about multi-day mode. We're going to stick with Tesla. Tesla's been a good one. We've traded it down. We've traded it up. Right now we're up. So multi-day mode is weekly levels. They're calculated on a weekly basis. And this is a new addition from March 2022. We originally started with day swing and position. So multi-day sits between day and swing. It's really good for 1 or 2 day swings. Pairs super well with the 10 minute to the hourly, and I use the 30 minute with extended hours on. And so here you can see the weekly levels for Tesla broke above the weekly call trigger around 140, right? Key level. Held that level. This is nice consolidation. So above here, you could have started to accumulate position, maybe using the previous close or some level down here at maybe this level here, 139 as risk, or you could have gone further if you wanted to have a deeper. If you're willing to have a deeper stop. And, depending on what you're trading, if you're trading stock, it's slightly different. Trading options, you may need to have a tighter stop or lower size, wider stop. Excuse me. And, we had a nice pullback, kind of a flag here, pullback to the a multi-day call trigger and basically just went from there. And of course, once it broke above this level here, this 50% fib level, it was the breakout, right? And we basically headed all the way up to one weekly ATR, which is 160. And that was a key target for us. And then also up to about the mid-range and then the 78.6 here. So you can see how these levels interact on even a weekly basis. Super helpful, these extra Fibonacci levels. And I hope you find them useful. But great for a swing. You could have entered here. You could have accumulated here. You could have swung it for several days. In fact, we did. And, great swing. Great short-term swing. And sticking with Tesla, this is going to be our golden goose for this presentation. So swing mode, which you guys are familiar with, we talked about this way back in March 22. It's good for like 1 to 3 swings, 3-week swings. Of course, you can go longer and you can use it to manage the trade longer, but going up position to position mode is probably more helpful. So swing mode pairs really well with 30-minute to daily. I use the hourly without extended hours. So I mentioned this before. It's kind of like my zoomed in daily chart. It's like seeing 7 candles per daily candle. And you can see here, this is us bottoming out on Tesla around 100. Didn't quite get to 100, but close, real close to it. And of course, we were observing that from 200 all the way down to 100, which is a massive, massive sell-off. Now, 101 ended up being the weekly -3 Keltners. So if you guys use Keltner channels, you're looking at a weekly chart, basically bottomed out there, and then it started to recover. And once it got past 125, that was basically it. Shorts were in trouble, and then you had earnings as a catalyst, which just absolutely sent it. So this is nice because, of course, you can use these triggers as ideas, right? They can work often, and of course here the trigger worked really well. But they can also really just work very well as support and resistance. And I use them all the time. So if you're watching my SPY plans in the morning, I don't always use the triggers as the definitive idea. Sometimes I'll just use it as a key level to play against. Key resistance, key support. So you can see that the put trigger here on the swing levels held support. And then, resistance at the previous monthly close, and then once we broke out of that, it basically was bullish bias, and then the breakout with the earnings catalyst absolutely squeezing shorts, in a disastrous move for them. But this is swing levels, super good for swings. You can use the ideas if you want. They work out pretty well. And of course, these intermediate fib levels can offer nice scale out points and scale in points. And if you're using a trend system, you can manage it entries as well with that. All right, position mode. This is also was available with the original release, and it's good for bigger swings, stock trading, or leaps. These are quarterly levels, and if I didn't mention it before, swing levels are monthly levels. So position levels are quarterly levels, and these pair super well with the hourly and the weekly. Hourly to the weekly, and I use the daily default. Sometimes I'll scale up to the weekly just to kind of see a bigger picture. But here's last quarter and the beginning of this quarter for SPX, and you can see very often downside or upside. Right now we're in an uptrend, sort of an uptrend here. Trying to see if we can recover, but whether it's a downtrend or an uptrend. It doesn't matter. The principles are generally the same. Usually it'll try to recover one of these longer term long or short levels and then retest it or retrace back before continuing. And you've seen that last quarter. We sort of bottomed it out at 3,500, recovered the quarterly long trigger, made a move to the mid range. That was a perfectly good swing. Right there, you could have traded that. You could have even bought position on SPY, or you could have bought position on SPY and then scaled out in the mid range. And then there was a pullback where the long trigger actually held, and then there was continuation up. Now, of course, these can be scary moves when you get these big moves down, and these that can definitely take you out. But if you're position trading, and you enter here and you're willing to say risk down to here 36.50. Of course, you're not buying the underlying of SPX because that's not possible. But assuming this was, let's say, SPY, which the chart would look the same, if you're buying something that has the underlying in it, then you can, you'll have your risk. You can move up, scale out, add position on dips, and then continue to scale out at key levels. And of course, you can see it made it to just above +1 ATR, almost actually to the extension, before failing, retesting, and then continuing down. And then we had consolidation at this 3,800 level for about 2 weeks before we started to break out again. Again, breaks out, long trigger, pulls back, and then continues up. Now we've reached this resistance at this 50% fib level. So it's likely that there'll probably be a retracement maybe down to this 38.2. It could go as deep as, let's say 4,000, maybe even a lower. But it's likely that we've, reached a near-term high, and then we're going to do a pullback and then continuation. We've got FOMC and a whole bunch of things going on. We've got tech earnings coming this week. So many things there's going to be volatility, and there's lots of catalysts this week. So we'll get some clear direction soon. But nice move up. And of course, these position levels can help you kind of understand the quarterly bias a little bit. All right, here's long-term mode. This is last year. Again, we're looking at SPX, so this is good for long-term entries, exits, yearly bias. Pairs super well with the hourly and the monthly. Sorry, hourly to the monthly. And I use it with daily and weekly. Weekly is my default, which I have here. You can see this is the end of the bull market at the bull run in 2021. So we had a dip, I think, in November, and then, rally towards the end of the year, consolidation. And then once we broke this long trigger last year for SPX, sorry, this long short trigger for SPX, we tried to break above the previous yearly close, couldn't make it, right? Double topped here. And once we broke down this, we never recovered it. And I hope you guys can see that here. Basically, it broke this level here, 46.50, let's say. And, it never recovered, made it to -1 yearly. This is yearly level. So -1 yearly ATR, pulled back, hit it again. Excuse me. Pulled back to tried to rally above. This is the early year rally, I think March, where we had just straight rally for 3 weeks. Went up to back to about 46.50, and then absolutely broke down and went to -1 ATR, and then went to -2 ATR yearly levels. Pulling back and then continuing down, and then of course recovering the 1 ATR before continuing lower. And you can see we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and now we're starting to see maybe the signs of something else happening, where maybe we have a higher low, and we'll see if we can put in a higher high. But we'll be able to spot that as we watch the price over the next several weeks. But you can see, again, the long trigger, broke above 2 weeks ago. It held that long trigger key level, and then it broke above, and it's starting to break out. It's above the 38.2 level. So we'll see what happens. Maybe a pullback like we talked about, and then we'll see what happens once the catalysts from this week occur. So those are the updates for everybody. And then if you're on Thinkorswim, there's a bonus update that came to you, which is scalp mode. And this is, again, only on Thinkorswim. So I know people ask me about this a lot, whether it's available for TradingView. It's actually become somewhat of a meme in the Discord. But it's only available for Thinkorswim because the capabilities are not there for me to build it on TradingView. If those ever become available, of course, nothing would make me happier than bringing it over. With the new levels, I don't think you actually need this. I don't even know if it's and there'll be another video where I talk about scalping and day trading with SPX and SPY. So I'll walk through examples of using both day levels and scalp levels for scalping. And so you don't need it, and there should definitely not be FOMO for it at this point with the extra levels. But I like these for scalping. Pair super well with anything 1 to 15 minute. I'm not sure I would ever scalp on anything like above 5 minutes personally, but I know some people that do, and I like to use the 3 minute. Works really well with the pivot ribbon system. I'm not showing the pivot ribbon on here because there may be people who use Wipster's clouds or SMAs or EMAs or whatever you want to use. There's also tons of people that just don't use EMAs, and that's perfectly fine. Levels will work regardless, right? If you just want to map trend and manage structure and trend manually, that's perfectly fine, and you should be able to do that regardless of whether you use a trend system or not, EMA trend system. So this is beautiful because you can use, if you're ignoring, let's say, scalp trigger. The scalp levels give you morning levels. There's a 9:30 session, and then there's a 1 o'clock session. So you get two distinct sets of levels throughout the day. And of course, each of these levels, the triggers are still just ideas. There's no guarantee here. They're just ideas based off of previous closes. And in some instances, they can work out super well. Here you can see there's a run to the scalp mid-range, perfect actually right there, and then it dumps from that point. Tweezer top here on the 3-minute, and that's a nice move to the downside. So you can use these as support, you can use these as resistance, and you can scalp level the level. This is SPX again, so early morning SPX movement, it's not going to be as dramatic, but it's still pretty decent. I mean, you're moving 20 points, let's say, what is this, 76 down to, even if you got down to here, right, that's still a 10-point move. That's a decent move. And if you have the right appropriate strike selected, it could be significant gains. The real magic happens towards the end of the day when you can use less capital. And if you get a move like this can be 2,000% move if you pick your strikes correctly. And so, that leads me to another thing. ATR level is great for strike selection. I have a whole video on it. And of course, if you're scalping, if you were up here and you saw that we put in a high and then a lower high and, a lower low, basically, it was setting up for short, and there was an opportunity to get in here. And if you use, let's say, 40.75 or 40.80 as your strike, that was a massive, massive move end of day for contracts that were relatively low cost. $25 for 40.75s towards the end of the day, I think somewhere around here. So super useful. I'll have a whole video talking about scalping with these levels, but you can see that they act as pretty decent support and resistance throughout the day, and they offer some good ideas for potentially going long and short throughout the day. So that's it. That's what's new since March 2022, and I'll go more in depth to how to use the levels, how to use the ribbon, and just my overall system, including incorporating how I use TTM squeeze, ready aim fire, and internals, market internals like tick, in another video. But I hope this helps. I hope you guys get a sense of what's new and what's changed since about a year ago.